JFK, you have a question? Stocks got clobbered today. The Dow Jones Industrial Average finished down 200 points after earnings season kicked off with a thud from aluminum maker Alcoa, which missed on the top and bottom lines. The result, well, it underscores an already sobering notion that this is going to be yet another quarter of year-over-year earnings declines. So we're bracing for a rough earnings season. Now, according to FactSet, S&P 500, the top line is going to increase by 2.5%, but it's earnings that are going to be down 2.4%. I should point out that overall earnings obviously going to be weighed down by energy. In fact, they could be off more than 70% from a year ago. Now, the sectors that are bracing for a rough ride, you have energy, industrials, telecom, real estate. And by the way, it's not just large businesses that are struggling. Today we got that small business optimism index. It slipped 0.3% down to 94.1. And the thing is, earnings and that optimism both peaked in the late 2014 period. So what's the true state of our economy and how vulnerable is the stock market? I brought in Brian Brenberg and Harrington to help us figure it all out. Cal, on the markets, huge, got walloped pretty good today.
Right.
What are you thinking here? I mean, we've been in a real tight range for about 66 days. Something's got to break soon.
Well, listen, this is a busy time right now. We got the election coming up. You have earnings season. You just highlighted Alcoa missing. I suspect a lot more misses coming up in this time frame. I'm trying to find some positive about this market right now. You got a GDP growth of 1.5%, Charles, with an inflation rate of 3%. So I'm in search of, and I think it just ties into what you and I have discussed on the show before, which is I see sluggish growth ahead, and I'm looking for something to push the market up.
But, Brian, here's the point, though. The Fed keeps saying, we got to raise rates. The economy is booming way beneath the surface. We'll see it soon. We're not seeing it. In fact, over the last couple of weeks, the economic data has been worse than anticipated. Yeah. You have back-to-back job flops, if you will. So where are we really?
No, well, we're in a tough spot, and I think the small business survey shows that, again, look, small businesses and businesses in general want three things. They want to see regulation decrease, they want to see taxes decrease, and they want to see economic growth, and they're not getting any of that right now. So I think the Alcoa number, the NFIB survey, kind of saying the same thing. The Fed wants to raise rates because it knows it's going to be out of ammunition for the next recession. It's not because they think the underlying economy is that strong.
Yeah, but what do they want, another 25 basis points to put back in that empty quiver of theirs?
They got to start somewhere.
I guess so, Kyle.
Listen, I think Brian's right, and I think he touched on something important in this country. I talk to small to medium-sized businesses all the time, a lot of it in California, and I can tell you that the regulatory environment that they are facing currently, as well as the potential of tax increases, if in fact we have a Democratic president going forward, is of big concern to them.
Let me then let's just talk about potential for a recession. It's been edging up. The entities that monitor such things, it's not anywhere scary. And of course, let's not forget that probably at least 1/5 of the country never came out of recession. But official recession, Brian, at some point it's got to be a real big threat for the next president early on.
Yeah, and with slow economic growth, you only increase your odds because it just doesn't take that much to dump us into recession. And so, again, I think that's why the Fed is so concerned here, because they see the weakness, they see the potential for this, and they've got to have some ammunition, because you can't count on the federal government with any fiscal policy, tax cuts to get us out of recession. They know they're the only ones working right now.
And that's what we need, right? A pure spark, right? Not the imaginary Fed spark. Lower taxes, lower regulations. What I say, unleash our animal spirits. Guys, thank you both very much for